Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
U.S. equities posting the biggest drop in 6 months. The market is adjusting here to a world where rates will be higher for longer. Here's Sinead Colton-Grant, Global Head of Investor Solutions at BNY Mellon Wealth Management.
Investors are working through very unusual inflation environments, much tighter central bank policy, and we're reacting to new information. So I would say earlier in the year, there was actually probably too much optimism about potential Fed rate cuts. That then got priced out of markets. We've now consolidated. We've built a better base to move forward.
BNY Mellon's Sinead Colton-Grant.
So we heard today from the former head of the St. Louis Fed, Jim Bullard. He was saying the Fed may need to raise rates even further as a way of avoiding a re-acceleration in inflation. Here is Bullard speaking earlier to Bloomberg.
Earlier this year, there was widespread prediction that there would be a recession in the second half of 2023. That recession isn't materializing. So to the extent you thought that a recession would produce extra downward pressure on inflation, that had to be taken back out. So you ended up with a higher for longer message here. I think that makes a lot of sense.
Former St. Louis Fed Bank President Jim Bullard. Now, yesterday we were talking about the Fed holding rates steady at that 22-year high for the Fed funds in a range now of between 5.25% to 5.5%. Most policymakers at the Fed also signaled they would favor one more rate hike this year. And in new predictions, officials trimmed estimates for the number of rate cuts next year from 100 basis points all the way down to 50 basis points. Brian?
Well, Doug, a changing of the guard at Fox and its parent company, at least on paper. We get the story from Bloomberg's Steve Rappaport.
Rupert Murdoch is stepping down as chairman of Fox's parent company and his News Corp media holdings, but the 92-year-old will maintain a presence as chairman emeritus of both companies. Fox says Murdoch's son Lachlan Murdoch will ascend to chairman of News Corp and retain his role as Fox Corp CEO. Lachlan, in a statement, expressed gratitude that his father will stay on to provide counsel for both companies. Rupert Murdoch got his start with a small newspaper in Australia and worked his way up to a global media empire with a vast portfolio that includes the Fox News Network, the Wall Street Journal, and television properties in the U.S. and the U.K. Steve Rappaport, Bloomberg Radio.
Big tech deal today. Cisco Systems has agreed to buy the software developer Splunk. It's a $28 billion transaction, and it is Cisco's biggest acquisition to date. This move really highlights Cisco's massive push into software and AI-powered data analysis. Here's Bloomberg's Ed Ludlow.
This is so in line with Chuck Robbins, right? A networking gear seller like Cisco adding the software services in complement to that. Splunk is a data indexing business. Basically, you can monitor network users in real time. It has a cyber security element. For those investors or Cisco and Splunk investors out there, this deal will not impact Cisco's previously announced share buyback program.
Bloomberg's Ed Ludlow there. By the way, Cisco will be paying $157 a share cash. That represents a 31% premium to Splunk's closing price on Wednesday. By the way, the cost of the transaction represents roughly 10% of Cisco's market value. Brian?
And here's something you alluded to earlier, Doug. The Bank of Japan expected to keep monetary stimulus unchanged at its meeting today. Investors will be focusing on any remarks by Governor Kazuo Ueda on negative rates or the yen. That's as the yen trades near a 10-month low, although we did get a pop today, as Doug mentioned. At the moment, dollar yen 147.55. Traders are on alert for possible intervention, with 150 per dollar seen as the trigger level. Investors will be looking for clarification on Ueda's remarks to the Yomiuri newspaper this month. Ueda said that the chances are not zero that authorities might be able to confirm a virtuous wage inflation cycle by year end, and that could be a prerequisite for a rate hike. Brian Curtis and Doug Krisner. Rashad Salamat will join us in a few moments. Doug, as journalists, we're naturally cynical. I can give you an example. We were waiting for a hawkish pause from the Fed, and we got it. But the thing is, we were waiting for a dovish hawkish pause, and we got a hawkish pause. So go sell. That's kind of the way the market reacted. And I see that as just the skittish nature to all of this.
Could be right about that. And let's talk about a case of bad timing now, because the latest data from EPFR Global shows that investors plowed in about $26.4 billion into U.S. equities in the most recent week. That was last week. That level is the most that we've seen since March 2022. And if you look at what was put into tech alone, about $1.3 billion. So timing, maybe not the best. And I think it's fair to say this retreat that we have seen, not just in the equity market, but in the bond market as well, has been very painful for that 60-40 portfolio. So far in the month of September, the 60-40 model is down nearly 2%.
So what's troubling, and this goes to the first part of your comment, is it doesn't look like now investors are quite prepared to buy the dip on mega cap tech, at least at the moment. We don't know, but that's the signal that we saw today. But also what could be troubling to others is that you had a pullback in everything, particularly in cyclical, consumer cyclical areas. The only thing that reasonably performed well was healthcare. Particularly managed care. That might be a standout going forward. I wanted to mention one other story that we will be looking at a little bit later. China is loosening capital control measures, and this is to make it easier for foreigners in Beijing to move their wages and their investments, their investment gains and such out of the country. So that's part of the effort to woo foreign investors. Will it work? Well, we have to wait. They've become pretty disillusioned.
Bill Gross said today that bond markets are headed for an unprecedented third year of losses because of sticking inflation and widening government deficits.
And wouldn't that be amazing? I can't even remember the last time we had 3 years of losses. We should look that up. Now it's time for global news. U.S. House Speaker Kevin McCarthy has sent members home for the weekend after his funding proposal was blocked. Ed Baxter's on top of that, has global news from the 960 newsroom in San Francisco. Ed?
Yeah, that's right, Brian. McCarthy's efforts to get a government funding bill have blown up, at least for now, as he got ambushed by two ultra-conservatives who voted even against bringing the bill up for a vote. Dissidents Eli Crane and once loyal supporter Marjorie Taylor Greene.
We should be passing our appropriation bills right now. And I've been very clear about take the Ukraine money out of the defense bill and put it in a separate funding bill so that members like me can vote no. And
others can vote yes if they want. Now, McCarthy has sent members home until Tuesday, shortening the working time frame and still saying there is time, though.
I know it's not pretty, but this country's too great to quit on. And so what we are going to do, and remember what this is, it's not a CR. It's the funding of government for the next 30 days to get our work done.
But the reality is he can't get any work done within his own party. Democratic House Leader Hakeem Jeffries, other side of the aisle, is scolding the MAGA Republicans and Republicans in general, for that matter.
We need the extreme MAGA Republicans to get their act together in the civil war that's happening on the Republican side of the aisle, that's paralyzing Congress. Get your act together so we can handle the business of the American people and solve problems on their behalf.
The deadline is September 30th, as you probably know. Let's see, Tuesday, when they come back, is the 26th. Wow. And Bloomberg's Laura Davidson says almost an impossible job right now.
Kevin McCarthy is still thinking at how can I keep my job? How can I keep my right flank happy? So they're trying all sorts of different things. They voted on this defense bill earlier in the day. It failed for the second time this week, a surprise to McCarthy. Now they're looking at, okay, can we go one by one and pass all these government spending bills? They're going to have to do some sort of stopgap measure to avoid a shutdown in 9 days. But this is where they're still kind of throwing everything at the wall, see what they can get. And it's almost certain that we're headed to a shutdown now, just given the timing and given where everyone is.
9 days, and they're gone for 3. Meanwhile, McCarthy has met with Ukrainian President Volodymyr Zelensky. He says some of his questions were answered, but all of the president's wishes could not be met.
Zelensky asked for a joint session. We just didn't have time. He's already given a joint session. So what we're doing for Zelensky is exactly the same thing that we did for the Prime Minister of the UK, the Prime Minister of Italy. We're putting the bipartisan group of members together to meet with him.
So continued aid from Congress continues to be a question for Zelensky. Chinese President Xi Jinping will meet with Syria's Bashar Assad, on the sidelines of the Asian Games this week, as Assad makes his first trip to China in nearly 20 years. And the Indian Parliament has approved a bill to reserve a third of lawmakers' seats for women. Prime Minister Narendra Modi says a defining moment in the nation's democratic journey. Global news powered by more than 2,700 journalists and analysts in over 120 countries. In San Francisco, I'm Ed Baxter, and this is Bloomberg.
This is Bloomberg Daybreak Asia. I'm Brian Curtis here in Hong Kong. My colleague Rashad Salamat is here in the studio with me, and our guest is Kim Forrest, founder and CIO of BoJ Capital Partners. So just a few moments ago, Kim, we were musing over what was causing some of this nervousness in risk assets. I'd like to get your take on it.
Sure. Well, I agree with your view, both of your views, that it's a lot of things. And I also think the third quarter is always kind of tricky, and I have to see it through my old sell-side analyst goggles, which says, the third quarter is where a lot of companies are unsure of whether or not they've made their quarter because of vacations. Throughout the Northern Hemisphere, everybody's on vacation, and it's just hard to get big deals done. So that just adds a layer of uncertainty to this quarter that many other quarters don't have. So everybody's nervous. It's the third quarter. And part of me scratches my head and goes, well, what are you playing this game for? Like, what's your timeline? And if it's to outperform for this year, maybe you're going to have a tough time. But How about we do this? How about we own good companies and we look for the next 3 to 5 years?
Yeah, I think that makes a lot of sense. It depends on your time horizon. In the short term, looks like choppy waters. I wonder whether some investors are fearful here that this is more than just seasonal weakness, and that it could morph into a little bit more of a sell-off, on the idea that you have this inversion of the yield curve that's telling us that something is out there that is likely at least to happen at a time when the Fed is pretty firmly committed here to higher for longer.
Sure, but I do think that what we're really missing here is that this is a data-driven Fed. And what they saw was data that inflation is persistent and higher than they want. So they're saying that job number one is inflation, getting that under control. Now, remember, America is really kind of unique with respect to the mandates of their central bank. They have two of them, which is full employment and steady pricing. But just because they have two of them doesn't mean they can ignore one, but they can weight one more than the other. And right now, inflation is what they're trying to conquer. Now, if they see, the economic conditions changing, guess what they're going to do? They're going to change. But right now, they were saying all things being considered, we're going to have to leave it higher for longer, which, that says that there's some strength here in the U.S., shouldn't be a bad thing. And yet people are very, very nervous that they're going to blow it. And I think they've done relatively well so far. So let's see what happens.
Yeah, see what happens, certainly. So, are we going to be seeing a slowdown? I mean, I'm not talking about stagflation, recession, or anything quite that drastic, but actually a meaningful slowdown in the pipeline. And will that, as you've been alluding to, be evidenced in the data we get out of, or should I say, the earnings reports that we get? And where does that leave you with your portfolio?
Well, I think we may see that. I think that is a very likely thing that probably in the next year, the economy of the U.S. is going to slow. I don't think it's going to stall. I don't think stagflation. But again, this could give you the ability to pick up a good stock at a reasonable price, or maybe even an extra reasonable price. I keep coming on your show and saying bad things happen for sure, and you should know what they could be, but good things happen too. I don't own NVIDIA, but NVIDIA has quadrupled this year because of its changing fortunes. And that's what you as an investor need to be looking for, is not just the downside changing fortunes, but being brave, stepping out and understanding that there might be a trend that you should spot and then invest into. So I don't think going to cash is ever the answer, but always being aware of both the downside, but then the upside as well.
Yeah, there's been quite a sell-off in some of the high-flying mega-cap tech stocks, more than 10% in some cases. In fact, what's interesting about NVIDIA, remember when it came out with its earnings, the stock popped from 300 to 400, and then it went further up after that, but now it's back to 410. So it's given up almost all the gains except for that one-day repricing following the earnings. So you can imagine that some people might be enticed by that. But with rates higher for longer, it seems like a lot of people are just interpreting this as sell tech.
Yeah, I mean, that always is the default answer for a lot of investors, and that's because tech and especially chips have been tied at the hip to global growth, if not region growth, right? So if you think that the global growth is going to slow even more than it has now, looking at China and Europe, I would say those are slow growing, if not negative growing places. But I think, too, you have to understand this generative AI stuff. And AI in general is something that a lot of companies are going to be playing around with and investing in to see if they can't get more productivity out of their workers by using it. And that's the key. Look for productive uses of AI, not just cool uses of AI.
I mean, everybody mentions it now. That's the thing. And it's so reminiscent of the dot-com boom. I mean, it does seem as though it's going to be the panacea for all the world's evils, the way it's going right now. Do you think people have just essentially just gone a bit too far, as they did in the late 1990s?
Absolutely. That is a great analogy. But look where we are. At the time, we thought ordering dog food online was the dumbest thing on earth. And yet, here we are ordering a whole lot of other dumb stuff and depending on it for a lot of, our daily needs. But it does work its way into your life. It just doesn't play out the way you think at the beginning of an investing cycle. And I think that should be the lesson for us all. Let's keep our eyes open and not just guess, it's NVIDIA, they're going to win, let's sell everything else.
So give us a theme that you can really bank on, and maybe just talk about portfolio construction before we finish.
Well, I kind of like to not overweight or underweight sectors, because as we are finding out again this year, oil's taking off. And if you look at the beginning of the year, I don't think anybody would have thought that, right? So I like maintaining the sector weighting of whatever your benchmark is, but then trying to find companies that are going to outperform their peers within those sectors. So things that we like in tech, since we're going to talk about tech, are I know AI always has the need for a lot of storage and fast computing power, and I think companies like AMD and maybe even Intel might have the ability to scale up and at least get some of the crumbs that fall off of NVIDIA's table. But more importantly, there's a lot of data needed for AI. So I like anything that has to do with storing data, and that's Micron and NetApp.
Okay, Kim, really good session. Thanks so much for joining us. Kim Forrest, founder and CIO of BoJ Capital Partners. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.